If you don't understand the dollar, you don't understand Forex. Now that might sound harsh, but the reality is you need to be using the dollar, otherwise you're trading blind. So in this video, I'm going to show you how you can use the dollar to instantly increase your win rate. Okay, so the first thing you want to do is you actually don't want to look at Dixie. Instead, you want to come onto TradingView and you want to type in DX, and it should give you the US dollar index futures, right? This is what we want to look at DX on TradingView. Now what this is the currency futures for the dollar index. This is what smart money is looking at, right? And this is as close to the real price action or the real price of the dollar that we can get. And also it shows a lot more gaps, right, in price action that the CFDs don't show, right? But all we need to do is we just need to get onto the weekly chart and we just need to look for the overall most recent trend, right? What is the dollar doing? Because the reality is there's only three things it can do. It could either be bullish, it could be bearish, or it could just consolidate. And hopefully, and remember for the weekly chart, right, we don't care about all this price action, right? We don't care about, you know, this order block all the way over here. We do not care about that. All we care about is the most recent bit, the most recent price swing, whatever you want to call it, and what has price actually done. And it's pretty obvious, or at least hopefully pretty obvious, right? Price has been bearish, right? Massively bearish. And if you watched a previous video that we did, you see these gaps here. Let me just make this clear. You see these big gaps, which is really a volume imbalance, right? See these big gaps in price action where there's only wicks covering each other, right, like that. This is what the currency future, this is what DX shows that Dixie doesn't show. And for those who don't know, Dixie is just a CFD version. And even if you trade CFDs, you want to be looking at this. But these gaps here in price action is what I was talking about in the previous video on like daily bias. And can you see how price literally beautifully fills it up and then starts to reverse? Now, overall, the dollar is still bearish. And all we need to know when we're looking at the dollar is the overall direction, right? And clearly, as we've said, the dollar is bearish. Now, we don't need to get onto, you know, the 5-minute chart or 15-minute chart. We just want to look at the overall trend. And, you know, we can get the daily chart up just to see what price is likely to do. Right, so let's just delete all these gaps here. If we look at a daily chart, what's likely to happen? In fact, let's get the 4-hour chart up, because the 4-hour chart is the lowest, highest time frame you want to use. Now, that might sound like insane, but it shows a lot more gaps, right? And the way price happen and the way, you know, price action moves in all markets is it does not move in straight lines, right? Price does not move in straight lines, even if it's bearish, right? If it's bearish, it's going to come up like that, right? So all we need to know is the overall trend. But it's also really important just to look at gaps in price action to see what price is likely to do next, right? Because this will help us when we talk about euro, dollar, gold, you know, Bitcoin, all the other markets. This will really help us, right? So we know dollar on the weekly chart's bearish overall. And we know, or at least see this gap here, very likely that price is going to touch it, fill it, and then continue downwards, right? So any retracement up, any bullish movement on the dollar is very low probability, right? So let's just remove all this. We've literally got all we need from the dollar, which is, let's go on the weekly chart, is overall, it's bearish, right? Overall, dollar is bearish. So this is really important. Now that we've got our analysis with the dollar, let's go and move on to other markets, right? So let's go look at euro dollar. Let's just get the chart right away. So remember, bearish on dollar. Let's just think, what do you think will happen to euro dollar? It's the euro against the US dollar. Let's think here, right? If you have the euro and you've got the US dollar and the US dollar is dropping, what do you think will happen to euro dollar? Will it go up? Will it consolidate? Or will it go down? Right? Let's get it up. Massively bullish, right? Now, the reason why it's massively bullish, and this is so important, so many Forex traders don't even understand what Forex actually is. You're not trading the euro, right? You're not trading the euro. You're trading the euro against the US dollar. You've got the euro, which is obviously what the EU uses, right? And then you've got the US dollar, the American currency, which we just looked at in price action, Dixie or DX, and the futures contract. We have euro and we have dollar, right? And the dollar is bearish, right? It dropped massively. What that means is the euro is going to go up. And look at this massive explosion in price action in euro dollar because the dollar is bearish. Let's get the dollar up again. This is Dixie, but basically the same thing. Dollar drops massively. Look at euro dollar. All right, let's look at euro dollar. Huge explosion in euro dollar. Now let's go look at gold, right? And we'll see the exact same thing here. What actually is gold? Now, when I say gold, I mean XAU USD, right? You can trade XAU. I guess what would it be against the euro and stuff? But most traders, we're trading gold against the US dollar, right? But think about that. What does that really mean? Gold against DX or Dixie, whatever you want to call it, gold against the US dollar. If the US dollar is bearish and dropping, what does that mean for gold? It means it's going to go up, right? It means it's going to go up. So it means, and this is the key takeaway of the video, the highest probability setups will be going long in gold, going long in euro dollar, going long in the other markets that we'll talk about. But really, really important that you understand that, right? For Forex, you're trading essentially two pairs, right? That's why we call it pairs. In this case, we're trading gold, the actual commodity, against the US dollar. If the US dollar is dropping, gold will explode, right, in price. And that's what we've seen here. Also, and this is like fundamentals, but you don't really need to know this. When the dollar drops, gold is seen as a safe haven, right? Because there's lots of rich Americans, right? There's lots of rich Americans, and they're not going to keep their money. If you're a millionaire and billionaire, you're not going to keep your money in dollar, let's say. You've got 100 million, you've sold your company. You're not going to keep, let's say you've sold it around here, you're not going to keep 100 million in US dollars just to watch price drop 20%, and then you lose, what, 20 million in like, how many weeks is this? What's this, like within within 6 months? Like, you're not going to do that. You're never, ever going to do that. So gold is seen as a safe haven. So that's why gold has exploded. So if we look at the other currencies here, and this is really important here. So GBP, you can see my analysis. Let's just clean these charts up. So we've got euro dollar, really, really bullish. We've got GBP USD, also really bullish. We've got AUD USD, which is also bullish, but we'll talk about this in a second. We've got NZD USD here, right? So remember, dollar is bearish in all cases, right? The US dollar is always dropping for all currencies. But what we really have here, and this is super important, if you understand this, this is as hard as trading can ever get. So we've got GBP USD, really bullish. Look at this high here, how we take it out. Euro dollar, also really bullish, takes out this high. NZD USD, really choppy, and I'll explain why in a second, does not get anywhere close to taking out this high. Sorry, that was AUD USD, and similarly with NZD USD, both of these pairs are very, very weak. Now, what's actually going on, and this is super important, is you have the New Zealand dollar itself, which is also very bearish, and you've got the US dollar, which is also bearish, right, like we talked about. So in this case, the New Zealand dollar is slightly more bullish compared to the US dollar, which is why it slowly, lethargically moves up, right? But as traders, what this means is you do not want to be trading this. You do not want to be trading a weak pair, a weak currency, New Zealand dollar, against another weak currency, because you're going to get chopped, right? And if it's chopping on the weekly chart, it's going to chop on the 5 minute, 15 minute, 1 minute, any time frame you trade, it's going to chop, right? When people say price is fractal, that's exactly what they're talking about. Similarly, AUD USD, you've got a weak Australian dollar against the US dollar, right? Both of these are very weak, but in this case, the Australian dollar is slightly more bullish. Yeah, all right. I was thinking, okay, should I say this or not? I'll give you guys a real golden nugget here, right? So this is, you better like and subscribe, right? This is advanced. This is really advanced stuff here. This is the real source as well. So if you type in 6B, you will get the currency futures. So 6B will give you the British pound. 6E will give you the euro futures. 6A will give you the Australian dollar futures. 6N will give you the New Zealand dollar futures. And you can see my analysis, right? Again, I'm not making this up. This is what I do on a day-to-day basis. This shows, right? Do you know how we did the dollar, right? Now, I know we did DX, but essentially it's the same thing. This shows how strong or weak the dollar is. This right here shows how strong or weak the New Zealand dollar is. Similarly, Australian dollar, euro dollar, and the pound itself, right? So, sorry, this shows the actual currency itself. So we've got the pound here, really bullish. We've got the euro itself, really bullish. And then we've got the Australian dollar itself, which is really bearish, does not take out this high. And similarly, the New Zealand dollar, which does not take out this high, right? So we've got two weak currencies, and the dollar's also weak. And then we've got two really strong currencies, right? So you can just mix and match if you're a swing trader, or, you know, let's get yen up actually, right? Yen too, also very bearish. So what that means, if GBP, let's say the pound itself is very bullish, it means GBP, JPY will also overall be really bullish. So what this means is we can just quickly look at the futures contract, New Zealand dollar, see right away that it's weak, see that the Australian dollar is weak, see that euro is strong, and that the pound is strong. And then we can quickly and easily just go and look at the crosses, right? So euro dollar, we know that this is very bullish. GBP is going to be bullish. NZD USD is bearish. AUD USD is also bearish. Okay, so what does this really mean as traders? This is the golden nugget, the key takeaway. this is what you want to write down, right? Because the dollar's bearish, the highest probability will be going long, right, in all four of these currencies. Now, because the Australian dollar is also very bearish, you do not want to trade this, right? Big X through this, right? Similarly, big X through this pair. We do not want to be trading this at all. You've got a weak currency against a weaker currency. You're going to get chopped. You're going to get bad price action. You're going to short this, or even, let's say, go long, right? Because we're bullish. Overall, you're going to go long. You're probably going to wait for a liquidity sweep. Let's say this is a stop run. Price shoots off. There's a fair value gap that you enter on. And price will still take out your stop loss, or it will just chop for ages and not do anything because you're in a weak currency, right? Against another weak currency. So ditch these two. Focus on GBP and euro dollar, right? And what will happen, and these are the setups that you enter, where let's say there's a liquidity sweep, price shoots off, you enter on, let's say, a fair value gap, whatever you like to enter on, and price just instantly shoots off to take profit, right? Let's be honest, you've had that trade before, right? Where price just hits your entry, instantly goes to take profit. Those are amazing trades, right? And it's not an amazing trade, like, oh, I got really lucky. This is what's happening, right? You're going long in a very strong currency, the euro, against a weak currency, the dollar, and as soon as you get tagged, price just shoots off. I'm not going to talk more about entries in this video, but if you want to learn more, go check out this video on screen where I talk about the golden entry, right? Liquidity sweeps, buyer's sweep, entry, all that good stuff. So one last thing I guess I would want to talk about, or just overall, is indices. So for those who trade indices, the dollar is bearish, right? So obviously we know the dollar is bearish. But the S&P 500, right, is also very bullish. Now, you might be wondering, okay, Atif, what's going on here, right? Because this isn't pegged. This isn't the S&P against the dollar, right? This is the top 500 companies in the US, right? But really important that you understand, when the dollar drops, the S&P 500 goes up, right? Now, the reason for that is, let me think about this. So, for those who don't know, I'm actually a qualified investment and trading advisor in the UK. In a lifetime ago when I worked at a bank. That's what I used to do. But if I remember correctly, so don't quote me on this, I'm pretty sure this is how it works. When the dollar drops, all of the American companies, because you've got to think about it, if the dollar drops, that means it's easier for everyone who's outside the US to buy American goods. Think about it, right? So if the price of the dollar goes down, and iPhone's worth $1,000, that means relative to euro dollar, GBP USD, it's actually a lot cheaper for Europeans, people in the UK, Australians to buy it. And then that means that American companies do a lot more business globally. And then obviously if they're doing a lot more business and they're making more money, they've got more profits, their stock price goes up, S&P goes up. I'm pretty sure that's how it works. A weak dollar means that it's cheaper for everyone else across the whole world to buy, and then these companies make more money and the S&P 500 goes up. I'm pretty sure that's how it works. Don't quote me on that. You don't need to know that at all, right? It's not, you're not going to get an exam on it. All you need to know, dollar goes down, S&P is going to go up. And similarly, S&P 500 goes up, Nasdaq's going to be dragged up with it, and Dow's also going to be dragged up with it. Again, can you see how Dow hasn't taken out this high here, whereas Nasdaq and S&P has? Similarly to how euro dollar's taken out that high, Australian dollar hasn't. What that means is you don't want to look for longs in Dow. And I know some of you love the Dow. The better trade for now is in Nasdaq, is in S&P. Similarly, if we get gold up, gold really bullish, silver, look at this, still not taking out all-time highs, right? So just something that you want to focus on. And while I'm here, I may as well talk about Bitcoin, right? BTC, this is, what's this? BTC USD, Bitcoin against the US dollar. So if the dollar is dropping, what's going to happen to Bitcoin, right? The only reason this wouldn't work, the only reason price wouldn't go up is if the Bitcoin itself was incredibly bearish, right? Because there's three things that can happen. If the dollar just drops and Bitcoin's just a normal currency, or even if Bitcoin's choppy, is it will just shoot off, right? The only way this will not happen is, like I said, if the Bitcoin itself was very bearish and the dollar was bearish, then it would just chop for ages, right? Like that, right? But obviously we don't have this here. So dollar drops, Bitcoin bullish. Obviously if Bitcoin's bullish, all the other cryptos will get dragged up with it. So dollar drops, Bitcoin's bullish, gold is bullish. Only look for longs. This is the key takeaway. Do not start shorting gold, especially at all-time highs, or basically right at all-time highs, right? Only look for longs. The highest probability setups be long in gold, long in Bitcoin, long in the S&P, any other indices, going long in euro. And just by doing our analysis, just by looking at the dollar and not even going below the weekly chart, we know right away to avoid this, trade these two, right? And we know exactly what to trade, right? This is how you do real analysis. No, you don't even have to do top-down analysis. The weekly chart literally tells you everything. And if you want to learn more about daily bias, where I go into like the 4-hour chart, which is good for like targets, right? Because obviously, you know, you're not trading the weekly chart. When you get down, when you're a day trader or a scalper or even a swing trader, you need to have a liquidity target, right? So if you want to learn more about like analysis, go check out this video on daily bias on screen now.